Yes, India still trades at a premium to emerging markets, but is a much smaller premium than it was before the correction about 3-4 months ago. Therefore, again, as I mentioned, we start to look into some of the companies that we like to find opportunities. Now, in terms of structural stories, what you want to look into are overall overarching trends that have many years to play out. In India, for example, one of the trends that we really like is inclusion of women on the labor market and overall kind of like, the ability of India to absorb more manufacturing. I think those are two interesting structural trends.
I think over the remainder of this decade, it is quite likely that US equity markets are going to underperform much of the rest of the world, or a more positive way to put it is I think the rest of the world, which was very cheap, particularly Europe and to some degree China, is probably going to outperform the US. Of course, that has already been the case in the short 3 months of nearly, or 2.5 months of 2025 so far. And I wouldn't be surprised if that continues erratically for much of this year.
What we've got is a tech story in China plus a bit of domestic demand. And I think that's waking up global investors. I'm noticing a few global funds that I follow beginning to add back some China stocks. So I think it comes back to this sort of selective story in EM. Maybe there's a story in Mexico, maybe at the moment there's a story in China. Elsewhere in emerging Asia, if we look at the big markets, Korea and Taiwan are really too correlated to NASDAQ to do well. And in the ASEAN region, there really is a lack of catalysts. If anything, there's some sort of negative policy in Indonesia. I think the story for India is a little bit more complicated. Obviously, the market has sold off. It sold off because people were disappointed with the level of revenue and EPS growth that was being delivered in an expensive market. There's perhaps less confidence on the growth story in India.